The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here. This is Friday. This is a live edition, Friday the 19th of July. And couple of things I wanted to say is, number one, great program. Start off the day with Steve Rhodes. You got Tom O'Brien and Daryl together. I mean, that was fabulous programming. I hope I can keep up with that standard. And then, of course, you got Nico DeHaan. You got Friday. Yep. Then you got Daryl Martin back again. You got Dave White. You got Tom O'Brien, 4 o'clock till 6. Wow. Programming all through the day and just fantastic programming. Let's go straight to the market. A technical Friday means I can take some of your questions on the more nitty-gritty details. I got some fascinating things to discuss here. First of all, I got to apologize to Mohammed yesterday. I did not realize that CMG had earnings coming out after the bell. This is the one time I would have said, no, don't. It's not really worth the risk reward at that particular point, other than, well, I had to take a very small position on a short position, but you wouldn't have been able to my expectation was if there was a pop-up, it would have been the 5 to 7%, and then it would start to pull back over a period of days. I probably wouldn't have wanted that position, so it was my error. I did not have my full capacity of seeing all the different screens, my 7 different charts that I look at, screens that I look at during the day. I was using one laptop at a stop along the turnpike, along the Route 91, 95 actually yesterday, and so I did not see the suggestions in the den that earnings were coming out. My mistake. So I just I like to just get things out, clear it up, and then we just got a fresh start looking at things. Now, I will be looking at Google in a moment, but first I want to go through everything in stepwise motion. As you know, for those of you who are new to my technique, it's just a really simple concept, the most simple concept that you've ever heard of in the stock market. I look for the most obvious lowest low bar to start a buy signal that goes to a buy mode, and all you ask for is 4 successively higher peaks. And those 4 successively higher peaks are going to be, simply put, they're going to be where you're looking at, if let's say the first price goes to peak A at 20 and then it pulls back. In other words, at a certain point, the next bar doesn't have a higher high than 19.99, so it makes a peak. The moment it goes to 20.01, starts leg B. Let's just say B goes to 25, stops dead. At 24.99, that becomes peak B. So it's a floating letter. In this case, you've got the Dow floating letter 14,551 low back in June, and that's a floating letter A until it makes the top at 15,075. The next bar has a high of 15,034, 40 points lower, so that becomes peak A, etc. Now we've got a leg D with a potential peak D. So the objective is always to get you to that 4th peak. Hey, is there anything simpler than that in the concept? Within that context, there is my Sears and Roebuck huge toolbox where you might need to have a plumb line, you might need to have a Phillips screwdriver, you might need to have an Allen wrench at a certain point. In this case, you need a 9-period exponential moving average. You need a MACD and a stochastic. Stochastic's at 93%. I've been talking about that for a long time. So we're going to go through these over the period of this particular hour, and we're going to discuss it. We've got leg D, potential peak D today if no new high is made above 15,590. Okay? Weekly chart is E/A. I'm in a certain camp right now. We will discuss that next week. My subscribers will know what I'm looking at. And leg D has begun in the monthly chart, and that leg D has a whole bunch of criteria. I'm hoping I'm able to get back to the office in time on Sunday to spend quite a bit of time to do the S&P and Dow monthly charts, even though the month isn't finished. We've broken to new all-time highs. Leg D up in the Dow and the S&P. That is absolutely so important, because it sets up a whole bunch of criteria that we have to look at. Dow is down 23 at 15,524. The S&P, SPX.X, that's the way I get it, it's making a leg D, a potential peak D, if there is no high today above 1693.12. At 1693.13, if that's today, That extends leg D, but the MACD is still climbing, and the stochastics outstanding at 94%. Leg F/A in the weekly chart. Let me just redo that. F. I have to go F first because of the way the technicals are, and leg D up in the monthly. Of course, I had that all done yesterday. It was on a different computer, different system, a different platform. So the S&P. Now, where does the Dow have support? The Dow has support about 150 points to 175 points below this, but major support of the 9-period moving average. Where does the S&P have support? At this particular point, it's the 1688, and 1672 is the critical 9-period exponential moving average support for next week. Let's go to the Qs. That's the trading vehicle for the NDX 100. We had two parallel 75.74 highs yesterday and the day before. Today gaps down. That's because of Google and ISRG, etc. And we're underneath, well, we're right on the 9-period exponential moving average of 74.63. There's a whole bunch of connotations here because the stochastic is still at 93% and the MACD is still very good. Implications we will discuss, and for my subscribers coming up over the weekend into Monday. We've got the gold, the GLGCQ13. Gold right now is up 820. I'm a little behind, but it's up, and it needs to clear. It'll make. I'm sure it's going to make peak D, leg D. I'm sorry, above 1299.70. The GLD will do that the moment it breaks above 120, 125.70. It's right now. It's at 125.07. Just pathetic action in gold. I'm talking about trying to come off at a major downturn, but it's moving up, and it's a steady move that we had discussed before. So there's an up channel that we're looking at. In my opening call, we do have a gold stock that's done really well on a percentage basis, and that to me is good enough. I don't want to get overdone on the golds. We've got so many stocks that are actually doing really well, and no shorts at this particular time. The short we had yesterday, we got stopped out for a 30-cent gain. I could have jumped right back in, but you know what? I want a very clear head at this particular point, and clear head means that I want to give myself the freedom of looking at the market fresh this weekend. Silver is at 19.43, up 6 cents. This is only peak B. Actually, silver's acting very poorly at this particular point. The dollar DXY, the dollar is right now at 82.61, down 22 cents. It's hugging the 9-period moving average as a resistance instead of support. Not good. And that double top, the V-shape, the pattern that I call the Groucho Marx eyebrows, that V-shape pattern, we're going to be watching that real closely because the monthly so far is not impacted yet. But if the dollar closes on a monthly basis underneath 82, I'd have to say 81.50. That's going to be very negative. So the EUR-USD, and we're going to go to call straight off. This EUR-USD is the currency pair holding the 9-period moving average as the dollar is using the 9, that black line, in the daily chart. Let me just move this over a little bit so you can see it clearly if you're looking at Tiger TV. See how beautiful? If you learn your tools, it just helps so much. Look, the 9-period moving average, that black line was beautiful support. Then it was beautiful resistance. Now it's supporting the euro. And I said if it goes into that bar, into that wick and holds there, in this case, it'll have to hold there for a full day. That's going to be positive, and it's going to say it's going to retest the high of 1.3205. So far the euro is in a rectangle formation. Let me just draw it in for you. A rectangle formation, and it's just working its way to the top of that angle. And the bonds, TLT, bonds have just not been very good. At this point, they are holding quite nicely. They're actually replicating the gold chart. All of this is just giving us many clues as to what could happen over the next week and a half. So they're at 108.80 in the TLT, up $1.30. If it breaks above 109.36, that starts leg D up. And the stochastic has to get better than 49% for it to sustain that move. And the volatility index, I understand when my subscribers say, gee, thank you for introducing us to these different techniques. There's the Eiffel Tower failure pattern in the VIX. It looks like an uppercase A, straight up and straight down. At this particular point, it's getting close to the 13.05 level, which is really critical support. The VIX is at 1313, down 4.5% today, minus 0.64. That is buying pressure. I have to say that's buying pressure. So I think I've covered. Oh, USO. I want to do the USO, and then I'm take callers. So USO right now is at 38.36 up 0.01 in leg D, a really powerful move to the upside. Weekly chart is broken out, is also in leg D, but where did it go? And I've been talking about this for so long. Sears and Roebuck Toolbox, what do I use? I use the 200 period exponential moving average in the weekly. I said that is going to be a target, and that target at 38, around about 38.50, today's high is 38.62. Boop, right there. MACD's at 91%. The MACD is very strong. Stochastics at 91%. Nice action. It means that that's a magnet, and you might pull back, but that magnet of the 200-period moving average must not be disrespected. So I think I want to take our first caller. Let's see, we've got Mike in Long Island. Hi, Mike. How are you?
Good. How you doing, Basil?
Good.
I'd like to take a look at Lowe's Corporation, LOW.
Yeah, Lowe's, which I had fully notated. Just give me a second here. 1 second. I'm going to get it up. Lowe's Corporation. This is I would not say the rival to Home Depot, because they are really lagging in terms of the overall, EF. Maybe that's an F, but it could have recycled. Give me 1 second here. Let me see. I've got, oops. Okay, so while you're talking, I'm going to notate this. Tell me about Lowe's.
I don't have a position. I just was looking at the chart and wondering, the technicals seem strong still, but it looks like it's setting up for a hat trick here.
Well, what I'm looking at in the weekly chart, I've got it as a brand new leg C. I've got it in leg F, possibly in the daily, but it could recycle. Yeah. And now the most important chart I'm looking at here, folks, this is how quickly you can do the Chapman wave. Look at how I did it as Mike's talking, while he's talking even. I'm just notating. That's how simple it is. I haven't been able to put in the arrows, but the arrows will come in a second. Here we go. The first arrow is right there. Always have to scroll to the left to make sure you got the low bar. Man, I tell you, Lowe's was such a laggard. And it was identified, I remember looking at it and saying, gee, this is actually quite nice action that I'm looking at in Lowe's. And I did not get a position in it, even though it was saying it's starting to play catch up to Home Depot as the home builders were improving. And now I've got leg D. I don't know what you get, but I get leg D in the monthly chart. All right, I hear music in the background. Am I correct? Do I hear music? No, I don't hear music. All right, thank you. Maybe it's outside. Okay. This is what I'm going to suggest. I'm going to suggest not doing anything with Lowe's right now. First of all, that whole area, I'm right now, I'm looking at a tremendous amount of building, both in the Boston area and here when I'm in Brooklyn and Manhattan. Not like it used to be, but it is in Brooklyn. Actually, it's not quite. I'm not sure I'm the person to give an account of 2005 to 2007 till now, because some of the projects that are ongoing are huge full blocks that have been dug out and are being built. So I'm going to talk about that in terms of Home Depot and Lowe's, and then we'll try to structure something that says, what are we looking for them to show signs of a pretty good top. So I'll be back with Mike Long Island straight after this break, and we've also got...
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. And this is what we're looking at. We're looking at Lowe's. Now, Lowe's Company is, they are the equivalent of Home Depot in terms of what they offer. But they've been the lag, and Home Depot really was the leader of the group. Now, I've just done Chapman Wave methodology notation in this chart, and I'm just busy thinking here. Maybe I should have a little competition out there. Maybe I'll set it up next week on charting using Chapman Wave techniques, and you can send them to me, and I'll score them for you and send you back answers, and I'll send you back as people do right now, but there are so many more people that are doing it that it'd be fun to do. If I got the time, I will just do it. So Home Depot back in May of last year made a low of 25.26, and then it made that H pattern that I love to see. So that became not a successful one. It was unsuccessful. But what you do, if it's an unsuccessful one, meaning it goes below the left side low bar, in this case, in August the 2nd of 2012, it went under the previous left side row, went to 24.76, just a 10 under, but you've got a major signal with a divergence, huge positive divergence between the slow stochastic and the MACD, all going higher, much higher than the previous low. So that's a huge positive divergence. That says that the next move up, if it takes out the left side high peak, which in this case was 27.25, it should go towards the top. If it takes out the previous major high, in this case it was the high of the 20th of June, around about 28.66. That's really important. So here we are. So we continue, and then I love this, when the price just walks the 9-period moving average all the way, and it goes from that low, it goes right to October, November, pulls back from a high of peak E, the 2nd of November. All these seconds, the 2nd of the month, very important to note that. It's a cycle thing as well. 33.63 was the high in the 2nd of November, pulls back, starts a brand new buying mode, goes to a peak D, pulls back very briefly and starts another one, and that one went to another high back in February, another peak D. Look how many peak Ds, 1, 2, 3, 4, 5, a couple of E's within that, and then it goes to peak C1, C2 under the previous high, pulls back, gives a sell signal, and now it's in a pretty good buy mode that goes from the 36 area all the way to 43, pulls back, and now you've gone slightly higher in a very quick peak A, B, C, D, E, F. That says you've got to watch for things. Well, I'm watching the stochastic, which is 90%. That's really good. It's holding the 9-period moving average at 43.12. That's very good. The MACD is still positive. That's very good. So let's move to the next time frame. Next time frame says that's the monthly. Well, the monthly has gone to peak E, then it goes to peak D, starts brand new buy mode, and now it's in C. So C says this is not the time to be going short, but it is the time to see a pullback with potentially one more spike to maybe another D to the upside. So there could be a doji candle at the end of the day here at 44.18. That tells you that if next week, so first of all, I would not be shorting this, number one. Number two is, if next week there is a close underneath 43.50, I would have to say under 43. Then there's a real good chance that 42.18 is going to be tested. And I'm going to say that on any particular day, if there's a close, it's going to say that the weekly chart very well might not make a new recovery high all next week above 44.55. If there is a close on any single day next week above 44.70, a little bit above where we are right now, that's just going to extend this move. So, Mike, I'm going to say don't think yet of going short. I would think of buying it on a small position for the next move up in the weekly, and at that point, I think we will be ready to look at the short side. And I'm just going to quickly, as we're wrapping up here, A, B, C, D, E. Peak E in Home Depot. Home Depot is underneath the previous high. I'm looking at this real closely, and I'm just going to say, you know what, both of them might be a little toppy right now. I don't think that they're shorts at this particular point, but I'm going to have a look at it again around about Tuesday. So thank you for calling. I hope that helps you.
Yeah, I'll call you when the weekly hits D again on this.
Thank you very much. Yes, I do want to watch it, so I appreciate you keeping me in touch with this one. It's very important to put the two together, plus the home builders. So thank you very much for calling. Have a great weekend.
You too. Bye.
It's hot here in New York, huh? Let's go to Mike in Ormond Beach, Florida. Hi, Mike. How are you?
Great, Basil. I wanted you to look at the Dow on the longer-term charts, monthly chart. I know the last time we had talked, it was a while back, and you were thinking that back in May, when we made the high of 15,542,
right?
As long as we didn't go higher than that in the month of June, that would have confirmed peak C.
Correct.
And then if we ticked higher than that, the following month, that would put us into leg D.
Absolutely correct. Mike, we got a break coming up. You've given us very important pieces of information. I'm going to show the chart of the monthly. When we get back, we'll talk about it. Really good point. We'll be back with Mike in Ormond Beach and Kenan Fort.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, we're back. Basil Chapman, Tiger Technicians Hour, and we are on. Let me just get that chart moved up right across. So we're Mike from Ormond Beach, and we're looking at the long-term chart of the Dow. Now, what you can see if you're looking at it, anyone's looking at this chart in Tiger TV, and folks, if you haven't seen my charts, if you listen just on the radio, if you're listening on the radio, if you listen to it as just a broadcast without the charts, you are just missing, in my opinion, you're just missing an incredible amount, because if you didn't have a technique like this, how would you know the simplicity of it when in May when we made that top, what I said was, if there is a lower high bar in June and we break that high of 15,547 or 542, I think it's 0.40, whatever it was, by 1 penny in July, that would start leg D up. And then there are a whole bunch of connotations that we've got to discuss. So what we're looking at is a beautiful trend line from the 11,749 high of January of 2000. It goes right to the high of 14,198 in October of 2007. And then what happens, that line continues higher. And where is it right now? It's going higher, coinciding with a bunch of things, and we've done that left side, right side price time match exactly, and we've broken out of it. So the next level is a resistance level that's coming in this month of July. And where does it come in at? It comes in, we've started it right now. We're starting to hit the bottom. This technique that I use, it's called, I'm going to type it in here so that we know what we're talking about. It's called the Chapman wave Chapman wave inside track. It's something that I developed years ago, and it is just so important, and I'll explain exactly what it is. What it says, and I'm going to type it in red because it is a barrier of sorts, and I'm going to make it nice and big so we know what we're looking at, make it even bigger. There you are, 20. Okay. That inside track, and usually I take it to the bottom line, and that's going to be in red. I don't want to make it too messy, but now is exactly the time when I want to use it, and the top line is green. Here we go. So this inside track says right as we speak in this very moment, the Dow minus 19 at 15,529, it is starting to hit this trend line that starts the resistance zone, and that resistance zone goes all the way to 15,900, but it's a moving target, so now it's a little higher than I used to say it was. It's at 16,160. So between here and 600 points higher, that's the resistance band that I'm looking at. I'm also looking at a bunch of things, configurations between the MACD slow stochastic, the relative strength, the unbalanced volume. And at this particular time, as we're speaking, at this moment, I have only one indicator that says, be a little careful, I'm starting to weaken. But you've got to look at the history of this. When there's been a peak C to D, as there was back in a very quick C to D back in, I think it was February, I think it was, February of 2011, at 12,391, you went down for March, slightly down, that gave a peak, and then slightly up for July, and then barely higher in June, I meant, and then, no, it can't be. So you've got, let me just get those dates again, April. And then in May, you got that May high. You remember in 2011, that was the sharpest decline we had since the March low of 64.69 in the Dow, and you started a major pullback from peak D. And there was also a mini trend line inside track, that dashed line and the gray line that you can see. Let me make it even bigger now so that I want you folks to see it, because Friday is the day we do technical analysis in the Chapman wave. That was the resistance, and we pulled back and we started a brand new move that became the inside track channel support for that particular trend line. And that's the trend line that's moving up right now. And that trend line has a resistance at 15,963, that dashed line. So it says to me that at this particular point, I don't yet have everything in place to say that I'm about to get a sell signal. That's number one. I might by next week or sometime during next week, but at this particular point, the day could close with the Dow down 150. That would make a difference. But at this particular point, I'm saying the monthly chart is not giving me any signal. So in answer to your question, number one, absolutely, I'm thrilled that you remembered that. We're in leg D. We're in leg D, and this gives me an opportunity now quickly to do this. We're in leg D in the Dow, in the monthly chart. Let me just show you something else. And this is going to be really important because it's part of the package. I have to look at the package. The package says leg D, monthly Dow, S&P, SPX.X, leg D, and it's also about to go into that resistance area. And there the resistance area is around about 1723, and right now we're 1683. There again, you've got your 500 points on the Dow to the upside. And it says the Qs, 1, 2, 3, have broken out. They're in leg E, and they just barely above that green line. It says that if you can hold above it for 2 out of 3 bars, and so far we've had 2 out of 3 bars, I'm not going to count that. That was right on the line. This is the first bar. If you can hold above there, it's going to be very important because you've broken the wedge formation going to the apex, and you've broken to the upside. That's usually very positive, and the MACD and stochastic are still very good at 87% in the monthly chart of the QQQ Trust Series. And now look at this. This is the thing that I found fascinating today. NYA.X. The New York Stock Exchange is in leg E in the daily, it has the potential to recycle to the upside. This could be an A, but I'm calling it E for now. Why could it recycle? The MACD is very strong. Stochastic is very strong. The weekly has not yet broken out. It's one of the only ones that hasn't broken to a new all-time high at 96.95.46. So far, the high is 96.04. So it's very close to making that V-shaped breakout, and it still needs leg D. So that, to me, is a positive. So I'm going to just say, everything so far is on track. As we move along, I'll be discussing what I'm looking at. Hopefully my subscribers will get the inside scoop first, but I'll be discussing what I'm looking at, and I have everything on track so far to say that I don't have a sell signal right at this particular point. Now, I think that's part of what your question is. Monthly chart is still very strong.
Yeah, I thought I heard you say that at the beginning of the show that we were in leg B in the monthly in the Dow.
No, D.
Okay, that's the main thing I wanted to confirm to make sure.
Oh, absolutely.
Nothing,
I'm sorry if that came across,
but
it is D. If it was B, boy, that would be really bullish. But D, in this particular instance, is still very strong, and I like it. So thank you so much for bringing it up, and I hope I clarified it for you.
Yeah, you did. And again, we won't confirm the peak D until we have a month with a lower close than
a lower high bar.
A lower high.
Yes.
And
we haven't got that yet to get the signal in the monthly.
Right. Okay.
Thank you so much for calling. I appreciate that, and it's always great to hear from you. Let's go to Ken in Fort Madison. Hi, Ken. How are you?
Hi, Basil. Good morning.
Yes. How are you doing?
I'm doing very well, thank you. I'm looking at these municipal bonds. I've been looking at them for a month or so, and they've gone down considerably. I'm looking specifically at one of them was BLE, Bob Louis Edward.
Do you have experience with BLE? Have you traded it before?
I don't have any position at all. I haven't never owned them before, no.
Okay, because what I'm looking at here, BLE, folks, is trading at $14. It's down 10 cents. BlackRock Muni Income Trust, I think it's number 2 or whatever it says, got 2 there. So I'm not sure what the 2 stands for. But if I'm looking at this and I'm putting it together with the MUB, which is one that I have notated about 200 times, and it's not here today, what happens? I mean, I thought I was resolving this problem. Let me just quickly do this. I need to make sure. Yeah, I'll just do this quickly here. Yeah. Oh, I'm going to go back to yours because the charts are pretty much the same. So yours is the BLE. So I'll go to the BLE because that's, yeah, they're very, very similar. So BLE is in made peak E after the low bar of $6.84 back in October of 2008. It went to peak ABC, and then it pulls back, continues to D, and goes to an E, and then it has its sharpest decline in quite some time. In fact, in the history of this chart from the low bar in 2009, this is the sharpest decline. Where did it go to that orangey peachy line right over there? That's the 200-period moving average, and that's at 14.20, I think, 14.10. You know, as long as this monthly chart is looking bad with the Roman candle of last month being tested, it looks to me like it's going to test 1386, and it's probably going to dip underneath it. But I have to tell you that I'm beginning to think that a chunk of the move in the munis has been done to the downside, and I'm anticipating, now this is just an anticipation. I haven't yet got the proof, although I'm beginning to get proof. I think that the munis are really close to some kind of a bounce, and this bounce will be a really important bounce, and this bounce could go from $14 to 15.11 to maybe even 15.55 on this particular BLE chart, which is BlackRock Muni Inc. And what it would do at that particular point would coincide, and therefore I'm not ready for it just yet, but I think we're getting real close to having a bounce. So this is what I'm going to suggest, because I know, Ken, you have a lot of patience, but you also like to get on positions that have the potential just to turn into a buy and hold, even if they don't start off in that position, correct?
Right.
Yeah, so then I'm going to suggest have a little patience, because we want to see how the left side low of 13.86 made on the 24th of June is tested. Right now, the chart pattern that's forming says, yep, it could have a bit of a bounce, but if it closes underneath that low, it's going to need at least about 2 weeks, or maybe even 3 weeks. And that, to me, coincides going into August, because August, everything about what I'm looking at says that August is going to be the monthly charts that are going to be absolutely the most important thing that I've looked at. So I'm going to suggest have patience, especially since they're munis. You don't want to have capital losses when you're trying to get income gain, right? So I'm just going to suggest, even if it pulls back just a little bit, well, a little bit at $14 is already 6 or 8%. I don't need a 6 or 8% pullback when I'm only going to garner 4% or 3% in dividends. So let's try to time this exactly right. And I'm going to ask you to call me maybe next Thursday or Friday. Let's give it almost a full week and see how it's doing. I don't mind missing a little bit to the upside, because I think when you actually get it, you're going to get a really nice percentage gain, and you'll set yourself up for at least one portion of a payment that is nice in terms of the interest. And then we might just have to go out hold in a counter trend move that takes time rather than price. That's my suspicion, because when it does break the 1350 area, which I think it's going to do, it's going straight down to the 12s, and that's something we've got to be really wary of. Hold tight. Let's not do anything. We'll come right back to it sometime in the next week or two, okay?
All right, Basil. Thank you so much for the info.
Good eye.
You have a great weekend.
You too. This is one we're going to keep our eye on. Thanks for calling. Let's go to Vicki in Hanover, New Hampshire. Hi, Vicki. How are you?
Fine.
You'd like to look at?
ECA.
So ECA is Encana Corporation now. Encana Incorporation. They're in oil, gas. Is that right?
Yes.
You know, I remember this used to be on fire. It's one we used to always talk about here at TFNN. We were all looking at it. It had this fantastic move once upon a time, A, B, C, D. It went all the way to a peak E top at $53.17 back in May of 2008, pulls back to the 200-period moving average. Then it has an A, B, C, D, double top, triple top, and then it comes right back down to the 200-period moving average, and now that is the resistance. Wow, this is almost like that darn dividend stock we were looking at in the BlackRock munis. So, okay, let me just, I need to, so now it needs to have the weekly chart. Well, it is turning up. So do you have a position in this?
Yeah, at 1732.
Oh, that makes it so much easier. Great. Because what I was going to suggest, if you do have a position in, see, it made a lower low on the pullback on the 5th of July. It went to 16.48, which is just a tad, but it closed above the low of 1651 of the 24th of June. That says it can tackle the next left side peak, and that in this case is 1733 of the 27th of June. It says if it does that, it can break out to the upside. This is almost like one of those gold stocks that we've been looking at. Okay, here's my recommendation. I love your entry position. Anywhere between 17 and 1738, 1740, I think is a nice entry point, because the way I'm looking at it, it gives you a starter position. That's kind of what you've got, right? Just a starter position?
Yeah. Mm-hmm.
Yeah, I'm going to suggest you keep it as a starter position. By Wednesday of next week, now, let me just do this real carefully. I don't want to jump this. I don't want to get too carried away just because the MACD is turning up a little bit in the weekly, and the stochastic is up at 12%. Oh, okay, I know exactly what I'm looking at. This is what you want out of it. What you want is by Tuesday. In other words, you've got today, you've got the rest of the day today. It's closing. It's kind of near the highs, and it's acting well at 17.49. ECA is the symbol, up 9 cents. What you want is by the end of the day to be closing above 1747, preferably 1752. Boy, if we can get to that one, and then open on Monday at that level, then I'd be looking at the 9-period exponential moving average, which is at 1463. I'd be looking at that as, oh, let's see if it's going to make that 57, 58. Oh, this is actually very interesting. I think you've got a very nice entry point as a starter position. We've got a break coming up. I want to discuss a bunch of things, but I'm going to just take a moment during the break to give some kind of outline of what I'd be looking at to add, because that's really what you probably want to do if it works. You want to...
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there, whether it be our health, career, or our finances. Some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced a 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.
Learn about good health and fitness. Living a Primal Lifestyle with Nico and Paige. Next on TFNN.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. Hold on one second, and I'm going to be right with you. Send. I just had to get that out. You see, you got to multitask when you do these shows. Okay, we are on with Vicky and Hanover, and we're looking at Encana. I don't really see from the chart pattern yet anything other than a bounce. Now, what I do have is a percentage-wise bounce could be quite nice, and that bounce says that by, I would say, very early next week, the latest Tuesday afternoon, Wednesday morning, I don't want to see that if this pulls back to $17.20. I'm going to say to you, keep this one position, tighten your stop, because if it starts to fail, it says they're doing everything wrong. It says a counter-trend rally could work, and it could be a very nice percentage bounce. I'm only treating it as a bounce right now based on the weekly and the monthly charts. Is a price-time match to the left side to the right side. It does say that if, because of the weekly chart, if there is a rally, especially today, if it can close, as I say, closer to the 1750s, 53. Wow, that'll be much better. Then I'm looking at it possibly next week closing over the 9-period moving average. And then the candle that you want to look at in your weekly chart is the candle of the 21st of June. It has a high of 18.47. It doesn't sound like much, a 1-point move in the stock that's, at 1747. But believe me, I don't have to tell you, looking at this chart, that every 2-3 week rally has failed miserably, and then it's gone under the 9-period moving average. But right now, what I'm looking at for the first time is there's a potential positive divergence between the MACD. I like your position. I would not add to the position unless it closed between Wednesday and Thursday of next week above 1753. Then I would have a little trading position. That trading position is a position you want to see all of next week, steadily, higher highs and higher lows, no pullbacks of any meaningful percentage pullback or point pullback, just steady moves to the upside. Every day you want to see selling come in and then for it to close towards the highs. It needs to change its modus operandi, which has been the exact opposite. So I think you're in a good position. Just in terms of risk reward, I would only add a small trading position, and as I say, breaks into the 1755 and starts to pull back a little bit intraday and then closes towards the high of the day, and it starts to make slightly higher highs in the daily chart. I think then it has a good chance to make a bounce. I'd only treat it a bounce. I don't think I'd marry the stock. I wouldn't hold it for too long. It could turn into something, but right now it has to prove it. So I hope that helps you, Vicki.
Okay. Yeah, thank you.
Thank you very much for calling. So, folks, I wanted to look at Google. I just wanted to show you right now exactly what I'm looking at and why I'm looking at it, because I think it shows you what I'm looking at in terms of techniques that I've discussed here so often. And Google, G-O-O-G, right now is trading at 897.53, down 13. It made in the daily, you remember, we've been discussing this for a while. I know earnings were coming out yesterday. It made a peak D in that cup formation in the daily chart at peak D, but it also had 923 round number, open and close the previous day of its high, and a 920 as where it opened, round number. The next day goes to round number 928 at D, and it becomes a peak D. In the weekly chart, it's got 928 round number high, and in the monthly at peak F/B, but the 9-period moving average at 882, 883 is really important, and so far it's trying to hold that. It's at 898. And the monthly chart is in leg D. So yes, tremendous selling in Google, but look at the way it's come back. I love that. So what I'm looking at here, using the Chapman wave techniques, there's that cut formation. That's what we're looking at. And if stocks like this can keep coming back, that's wonderful. Folks, have a fantastic weekend. Stay tuned for Nico and Paige. The Dow is in leg D, maybe peak D, but everything so far is very good. I'll be back on Monday. Don't forget my opening call. Check it out for 2 weeks free. This is a fantastic time for it. See you Monday. Have a wonderful weekend. Thank you to
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.